Major indices around the world are crashing right now as this Russia-Ukraine war rages on. Here in the US is no exception. All the major indices are down between 2 and 1.5%. It's not looking great. Oil hit a 13-year high last night before slightly recovering. It's not looking fantastic around the world right now for slowing economies, rising inflation. It doesn't look great. But on the bright side, we're going to talk about two stocks that Goldman Sachs sees massive upside over the next 12 months, so stick around. Hey guys, welcome back. I'm Richard Allen with TipRanks TV. Remember, you can check out all of our content here, plus original exclusives on tipranks.com/TV. I would love to have you check that out. Let me know in the comments when you do that. But without further ado, let's jump right into the video. The conflict in Ukraine continues to rage on, affecting the world economy. In fact, I had to fill up my little Ford Focus today, and for the first time in a very, very long time, it was over $40 to fill that tank up, and there's not a big tank in that car. Oil prices have gone through the roof, hitting a 13-year high yesterday before recovering slightly. But I paid a ton of money for gas. It's certainly affecting you out there as well. So let me know, what are some other areas that you're seeing in your life besides gas prices that are being affected by this conflict in Ukraine? Is it wheat prices, bread? What is it? Let me know down in the comments. I want to hear from you. But besides rising prices all over the place, I do want to talk to you guys about two stocks that Goldman Sachs sees some massive upside over the next 12 months. First company we're going to talk about is Samsara. They are a connected operations platform. They're used for tracking fleets of vehicles, other equipment, and allows for real-time connectivity between physical assets and people. Their ticker symbol, if you are not aware, is IoT. That stands for Internet of Things. Very clever, Samsara. This is a newly listed company. Samsara went public in December, raising $805 million after selling 35 Class A shares at a price of $23 per share. This gave the IoT player a valuation of $11.5 billion. But Samsara stock has also taken a hit due to the unfortunate timing of its IPO. The shares are down by 37% since going public, despite dialing in a strong quarterly report, the first since going public. In Q4, adjusted EPS came in at -5 cents per share compared to the analyst expected loss of 7 cents per share. Revenue of $125.8 million showed a 65.7% year-over-year uptick, also coming in above the street's forecast of $116.4 million. Samsara's outlook also came in better than expected. But what do the analysts overall think about IoT? Samsara trading right now just under $16 per share. This is a strong buy based on 9 analyst ratings with an average upside of 78%. The analyst that we are profiling today is a Goldman Sachs analyst with a 60% success rate, average rate of return of 12.3%. He sees this as an 83% upside stock over the next 12 months. So that's something to keep in mind. Second company on the list is Informatica. Ticker symbol there is INFA. This is a provider of data integration software and services. The company's data management offerings are used by clients including government organizations, financial and insurance services, and telecommunication and healthcare companies, amongst many others. Informatica's artificial intelligence powered platform acts as the bridge for enterprises' data troves, connecting across data lakes, on-premise systems, data warehouses, and front office applications. All of these coalesce to give enterprises a bird's eye view of their application, supply chain, and multi-cloud environments' ongoing health. The company's transformation to a cloud-based company was marked by its return to the public markets last October following a 6-year hiatus. The company sold 29 million shares at $29 each, raising $841 million in the IPO. That gave the Redwood City, California-based company a valuation of $7.9 billion. However, again, the timing of the IPO has coincided with the market's sharp downturn, and it has been a brutal reintroduction to life as a public entity. The stock has seen losses of 39% since the first day's close. A mixed Q4 earnings report has not helped either. Revenue increased by 8% year over year to reach $406.7 million and beat the street's call by $10.16 million. However, the company missed on the bottom line as EPS of negative 25 cents fell short of the consensus estimate of 12 cents. That said, Goldman Sachs thinks this is a compelling entry point for Informatica. But what do the other analysts think about Informatica? Ticker symbol INFA is a strong buy. Also 9 analyst ratings with an average upside of, take a peek at that, 115.63%. But Goldman Sachs sees this as a 165% upside opportunity. So let me know which one of these stocks is your favorite. Is it Informatica or is it Samsara, the Internet of Things company? I would love to hear your opinion down in the comments below. And again, the markets are crazy right now. The major indices are down. Let's take a peek at TipRanks.com and see where the major indices are right now as of finishing this recording. NASDAQ down 1.43%. The Dow Jones down just over 1%. And the S&P down 1.23% on the day. But, just a few minutes ago, the NASDAQ was down 2 percentage points. So the markets seem to be recovering a little bit on the day. Guys, thank you so much for joining me for another video. As always, if you learned something new or found any value in this video at all, let me know by hitting that like button and that subscribe button down below. And as always, I'll see you in the next one.